Hi, I'm Max Keiser. This is the Keiser Report, and there's so much going on. I just need to speak with Stacy.
Right, we're in the lead up to the anniversary of the end of Bretton Woods. Remember the Nixon shock, August 15th, 1971, when the U.S. closed the gold window and basically, essentially ended the post-World War II era of Bretton Woods, and now we've had endless money printing. But here's the headline from The Guardian. As a result of this, I think, out of control and rising. Why Bitcoin has Nigeria's government in a panic. As leaders around the world grapple with cryptocurrencies, what happened when the African country tried to ban them? So Max, you and I have been covering this. We covered it when they first tried to ban this earlier this year, and well, it doesn't look like it's gone so well for them, because an array of factors from political repression to currency controls and rampant inflation have fueled the stunning rise of cryptocurrencies in Nigeria. In February, the government took fright and banned cryptocurrency transactions through licensed banks. In late July, it announced a pilot scheme for a new government-controlled digital currency, hoping to reduce incentives for those wanting to use unregulated crypto.
Right. Well, this is a major story that we've been covering here on Keiser Report now for 2 years about specifically Nigeria. So we know that Bitcoin is a tier 1 global store of value, global money, similar to gold in that respect, that it competes with fiat money and in fact puts fiat money out of business, and all the central banks that peddle fiat money out of business. So the question has always been, which country will emerge as the leader? Which country will be the dominant economic force in the 21st century? The obvious candidates like China, the US, Great Britain, the problem that they have is that they have already entrenched oligopolies in the fiat money world, and they also have the ability to exert authoritarian power on their populations with ease. Okay, let's go to Nigeria. Here's a country that is suffering from inflation. They have a huge population of 200 million or more, very young people that are already online, already on their phones, and the government is not really able to crack down. They add all those things together and you have a breakout, you have a breakthrough. You have the Bitcoinization of an economy, and you have the Bitcoin standard emerging. And it's so exciting because it means that the world will be born again, and it looks like it's going to happen in Nigeria.
Right. We have hyper-Bitcoinization in El Salvador already. They got downgraded by Moody's as a result of that. But I think it's just the end days of that post-Bretton Woods period and the end of the all-fiat world. In terms of, yes, the entrenched oligopolies in especially around money and money printing, because remember, US banks and other Western banks create most money, right? Most of it is created through loans. So there is a sort of old, stuck in their ways mentality about that because we've ruled that way for so long. But Nigeria has one of the youngest populations in the world and is ripe for digital finance. With many people looking for ways to escape widespread poverty, however, pyramid schemes are proliferating. So there are a lot of crypto, i.e. not Bitcoin schemes. So that's why, you just stick with Bitcoin, just like in precious metals. As money, you stick with gold, not like any of the fake gold or anything like that. So, a better gold. There's only one Bitcoin, and that's the only crypto. All the rest are essentially a modification or sort of a, fiat scheme of pyramid-like structure to it.
Right. Well, we were the first TV show in the world to mention Bitcoin back in 2011 when it was $1, and we said this looks like the real thing. Everyone should be owning it. We've been covering it extensively ever since, and we have the widest reach of any show in the world in terms of covering Bitcoin, particularly at RT Espanol, and our friends down there at RT Espanol who put our show dubbed into Spanish. It gets millions of views every week, and it's incredible views on YouTube. Thank you so much again, RT Espanol. You guys rock! But nevertheless, the point being that with Bitcoin, you have this ability now to transcend all these entrenched oligopolists and establish a new kind of presence that asserts the individual sovereignty, the individual creativity, the individual rights, and the individual dominion of the best amongst us to shine and to be part of a new meritocracy that's driven by unconfiscatable, hardest money ever created since the beginning of, since 400,000 years ago, when humans first started playing around with fire.
Well, yeah, let's talk about that playing with fire, because the Nigerian people aren't wed to, they're fortunate in a way that they're at this point in time of Bitcoin where not only is their median age, they're much younger than here, but they're not wed to superpower money, right? So they're able to accept the idea of Bitcoin and having that uncensorable, immutable money. And that's really important, because when you look at what's happening in the US over the past week, the headlines I've been paying attention to is PayPal and other financial services companies tying up with NGOs and think tanks to start to get ready to deplatform. You know, if you get deplatformed from Facebook and Twitter, then you're likely to get deplatformed from financial services. So something similar happened in Nigeria, and they responded by turning to Bitcoin. They don't have the surveillance state that we do, so they've been able to circumvent that. And
right, just a quick comment on that, and to speak to the proliferation of the altcoins, of which there are thousands. Only Bitcoin is actually decentralized.
Yeah.
Okay, the other ones are not. And our friend Jameson Lopp, who's over at CASA, of course, did an exhaustive study on nodes and who can run a node, and because running a node is the hallmark of decentralization. For example, Ethereum, you cannot run a node. It's not decentralized at all. It's not money, and it should be avoided at all costs. Every single other of the altcoins are also not decentralized to the extent that Bitcoin is decentralized. And that's the key factor. You want to have your own node, and you want to be part of the decentralized network, and you want to have unconfiscatable wealth. Once you go into any of these other coins, it could be Ethereum or Cardano or these other coins, you're exposing yourself to the vagaries of centralization, and then you're basically haven't escaped the fiat system at all. You're just right back in the fiat system.
But it makes sense, as well as we're seeing the entropy hit, the Trefin dilemma hit the US dollar, the disintegration of the dollar as a payments rail and a unit of account globally. It just makes sense. They knew at Bretton Woods that it would eventually happen, and it is happening, I believe. That's my theory, and that's why we look at headlines that support that theory. So in Nigeria, you know, this whole process of hyper-Bitcoinization for them just started out of necessity, because it was not just in February of this year where the government banned banks from being able to facilitate transactions in Bitcoin, but in 2019, it was when the government there banned access to foreign exchange for textile import companies in March of 2019. That forced business to suddenly need a way to transact with their Chinese suppliers. So they had to turn to something that was able to be traded easily on a global market. The Nigerian naira can't, and the Chinese yuan can't. So they had to find something that was convertible and easy to use in an exchange with a Chinese company. And they accepted Bitcoin. They recognized it as a store of value and a unit of account. So they traded with these companies that are highlighted in this Guardian piece.
Right. Well, to get back to the Nixon shock of 1971 that you started talking about at the top of the show. So that unleashed 50 years of fiat money chicanery. And the U.S., of course, is the biggest crook of them all over there, printing trillions and trillions, and it's accelerating at an exponential rate. Other countries try to mimic the U.S. because the U.S. brand is that print money and be a conspicuous consumer and shop till you drop and take lots of OxyContin, and you can be as Disneyfied as we are here in California, right? So Nigeria is actually trying to be like America. Britain tries to mimic America. All of Europe tries to mimic America. That's the global standard, is to print till you die, print until you euthanize yourself. So what's happening in El Salvador is that, wait a minute, we're going to make Bitcoin legal tender, And we have our own culture. We have our own history. We have our own people. We don't need to be, Goofy and Donald Duck surrogates. And Nigeria is saying, wait a minute, we're in Africa. We don't need to be like Alan Greenspan's, stepchild. We have our own culture, our own continent. Bitcoin gives us our freedom, gives us our identity. We don't have to worry about all that. So that meme, that idea, and Bitcoin is backed by the global imagination. We as humans want it. Therefore, we as humans will get it.
In terms of, first they cut off foreign exchange controls on importers of clothing, then it's obviously widespread because of the COVID lockdowns. There was a shortage of dollars and stuff like that, and now they tried to ban Bitcoin. But according to Bitcoin trading platform Paxful, Nigeria is now second only to the US for Bitcoin trading. The dollar volume of crypto received by users in Nigeria in May was $2.4 billion, up from $684 million last December, according to blockchain firm Chain Analysis. And the true scale of crypto flows through Africa's largest economy is likely to be much larger, with many trades untraceable by analysts. So there was a huge increase in volume, like threefold from just December to May.
Yeah, if you run a country, India, Iran, China, Russia, and you believe that your country has hundreds of years or thousands of years of cultural equity, cultural identity, vibrant population, and a will to be who you are, you would open the gates and allow people to be Bitcoin-centric. That's the fact. And I'll argue any potentate, president, or leader on that point in a public forum of your choosing. Just fly me in on your private jet, and I'll be happy to educate you.
And good thing, the EU is actually going to exempt private jets from any new fuel tax. Only peasant passengers will have to.
I saw a rumor coming into the show. I don't know, haven't been verified yet, but apparently Aramco over there in Saudi Arabia are going to start using their vast energy resources to start mining Bitcoin. If that's true, if that's rumor correct, then game over. Bitcoin's going to 100,000 in the next 3 months.
Well, hyper-Bitcoinization is here. We've seen it in El Salvador. Remittances is an important ingredient in the economy of El Salvador. It is also for Nigeria. They do mention in this article as well that remittances into Nigeria from those working abroad, which were worth more than $17 billion in 2020, have played a role in the adoption of Bitcoin there. So that's disintermediation. That is hyper-Bitcoinization. That is the end of the post-Bretton Woods fiat dollar system.
Right, and that's the end of part one. We're going to take a break, and when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Egon von Greyerz of goldswitzerland.com. Time for our Egon sanity check. Egon, welcome back.
Thank you, Max. Good to see you.
Now, it's been 50 years of fiat money, going back to August 15th of 1971 when President Nixon closed the gold window and this whole fiat money began. So how significant is the Nixon shock in terms of monetary history? What is it? Why did it happen? And what happens next, Egon?
Because we live today, we think it was extremely significant as something that it's changed the world totally. But I always go back to history. I mean, this has happened every 50 years, 100 years throughout history. As long as there's been some kind of money, fiat money, precious metal money, silver money, gold money, the governments always have to cheat and debase that money one way or another. With the denarius in the during the Roman Empire, it went from 100% silver content to 0 silver content over a 100-year period. So it really is inevitable that every single, 50 to 100, or every 50 to 100 years, it has to happen. So, Nixon, we can blame Nixon. It was his fault, and his fault that we are in a mess now. At the same time, it's happened every so often in history, so it had to happen. So he was just a messenger, and basically we'll blame him for it, but it would have happened anyway, because no government can live with without printing money, because otherwise, if they can't print money, they can't actually buy votes, and that's the way that they rule the world, unfortunately.
Right, so let's talk about inflation here for a moment, because this money printing, going back 50 years, it's been ramping up for decades. And it's gone hyperbolic in the last decade. We haven't seen top line inflation so much until recently. So there's two schools of thought. One, it's transitory, brought on by the COVID virus and some of the externalities that caused. The second school of thought is that it's a structural shift now toward higher inflation based on all this money printing. What's your view?
Well, my view is very clear. We are going to an inflationary period now. Take my word for it. There's absolutely no other way. The disinflationary camp now thinking that we're going to see a period of low inflation, low interest rates. That ain't going to happen. So I'm seeing now that's going to be the shock to the world. I'm seeing bond yields going up dramatically. I'm seeing not the inflation. We're seeing inflation in every area of markets now. We're seeing it in food prices. We're seeing it in shortages in all kinds of goods and services. And we are going to get, and remember, I was there in the 70s. I was in the UK, which was a good place to experience real inflation. And I saw inflation going to an average of 50, well, average was 15% for 7-8 years, and it was up to 25%. And the currency collapsed, of course. So I've seen it happening, and we're going to see it exactly the same now. We're going to see wage inflation. Food prices will continue to surge. And of course, the effect, as we all know, will be the major effect. Of course, it'll be markets going down, but it'll be in the currency also. That's always the effect of inflation and money printing. Now, since I lived in the UK, I looked at the inflation figures, what was called the UK, the Retail Price Index, from 1800 to 1971. And on average, it was 1% inflation a year. That is a typical inflation throughout history. People think that it's normal now that share prices double every few years and house prices double every so many years, 10 years or whatever it's been lately, 10, 15 years. So, but that is not typical. Typical is what I just said. From 1800 to 1971, 171 years, that was average 1% inflation. I didn't look at exactly the same figures for the US, but I'm sure they'll be the same. So from 71 to today, it's been 6% average. So we've gone from 1 to 6. And of course, with 1% inflation, prices go up double every 70 plus years. And with 6% in inflation, they double every 13 years. And that's what we've seen now. And seeing now, that is not typical in history. But we are going to go into now inflation escalating, and it's going to become exponential at some point. And the interesting thing is the bond market will be, of course, giving us the signs. And the Fed will not need to buy bonds anymore at some point in the next year or two, because the whole market will buy bonds. They will get out of stocks and they will buy bonds, because that's the only way they think they should protect themselves. Few of them realize that they should buy gold instead, but that will also be, that would be a major bull market in gold, or a debasement of the currencies, as happens every time in history in these situations.
Right. You talk about historically inflation's run at 1%, 1.5%, and we're in an unusual period. One of the historical impacts, inflationary impacts, would be technological advancement, and certainly the Industrial Revolution. You talk about England brought on cheap, mass-produced plates, dishware, soap, underwear. So prices for these things actually went down a lot. And that was a mitigating factor to the inflation. How is it that we're in a technological age, the information age, which is supposed to be as significant as the industrial age, and we're into this technological boom of apps, of Uber, Amazon, all these things happening with our cell phone. And so that should be deflationary. And yet we see prices going up despite that. Is that a testament to how reckless the central banks are, Egon?
Well, of course they are. And, inflation, as we both know, does not arise from prices going up or disinflation. From technology will play a certain role, but inflation arises primarily from debasement of currencies. And if you print worthless money, you basically cannot avoid debasing the currencies, and therefore automatically you create inflation. Every event of hyperinflation in history, and it happens regularly, as I just said, and it's going to happen again. This time it will be on the global scale. It never has been before. Before it was only a region or a country, and now there'll be the whole world. And every event has always happened because of the debasement of the currencies. So I don't see anything different now, and that's what we will see. And never mind, as Nixon said, we temporarily will suspend the backing of the dollar with gold, and here we are 50 years later. And we are seeing rampant inflation now, and it's just starting. It's going to be vicious. It's going to be very vicious in the coming years. And it's going to be shock. It's going to be a shock to markets, because markets don't expect inflation. Bond markets don't expect inflation. They're seeing it coming. We're seeing all the signs, but nobody wants to believe it. Central banks are going to keep rates down. Absolute nonsense. They're not going to succeed in that, and in the end, they will actually be forced after the event to raise rates, as they always have.
All right. Well, okay. Let's talk about this for a second. So the technology has been huge. The technological advances, and the money printing's been also huge. I get what your point is, that it's a money printing phenomenon, and the technology track is not necessarily the contributing factor. However, the stock market's hitting new all-time high are from people buying tech stocks not because of the money printing, but because of all the economies of scale that come with the technology. And it seems like they have deluded themselves. In other words, they believe they're buying these stocks at all-time highs because they believe the growth story at 60 times earnings. But they don't see, actually, the reason they're buying them is that they're front-running the central bank. And they never admit that. What are your thoughts?
It's always the same, Max. It's always the same. You remember the Nikkei, the Japanese stock market at the end of the 80s, going up to 40,000, and you read all the reports from the brokers and the analysts that this is just the beginning, and we're going to see this going on forever. And the market, of course, crashed totally. Down from 40,000, eventually down to 10,000, roughly. We both remember, not very far away, NASDAQ in 1999, 2000. So, in a short period of time, in the last year, it doubled. And then it went down 80%, and that was tech stocks. So there was exactly the same phenomenon as now. So, but as we say, plus ça change, plus la même chose. The more things change, the more they stay the same. It's going to be exactly the same as before. These tech stocks are going to collapse, and the valuations will come down dramatically.
Right. Now, you recently tweeted, quote, "There's no strong dollar, there's no strong euro. The currencies are all ephemeral blips in history that are destined to become extinct the day they are born." Now, you have history on your side, Egon, right? I don't think there's any fiat money that's ever lasted, ever in 300 years, or lost 99% of its purchasing power, Egon.
Yeah, there is still one currency in the world that's been around for a while, and that is the pound, the UK pound. It's been around since the late 1600s, but at that time, 1 pound bought, I think it was 12 ounces of silver. Today, 1 British pound buy 1/20th of an ounce of silver. So although the currency in name has survived, in reality, it's become worthless since, like every other currency. So, and that is the only currency in history that is still there by name, but by value, certainly not. So, it's so easy. This game is so easy because it happens over and over again in history. And it's sad to see that all of these investors and analysts and governments, they have no interest in history. It's always different today because they live today. History tells us otherwise.
Right. We're going to have you for a second segment, and we've got about a minute left in this segment. So, a quick question. I mean, you've got your fund over there, Gold Switzerland, and we look at all the money management in the world, about 1% invested in gold. What are the trends? Are people starting to wake up to this and they see that gold thing move up, or they haven't had the day of reckoning yet? We've got about 45 seconds.
Okay, let me correct you. We don't have a fund. We assist high net worth individuals to preserve their wealth by holding physical gold in their own name. So we are a facilitator. We're not running money as such. And yes, if you're talking about right today, gold demand is very slow today. Refiners are not very busy. But if you're looking at people moving out of the banking system, wealthy people, we're seeing that all the time. We're seeing money moving from the banking system to the private vaults that we offer to clients. So that move is continuous. The gold buying is not there right now in any major quantities. That's going to come, and that's going to come in a big way.
All right, Egon, got to go. We'll hold another segment shortly, and thanks for being on Keiser Report.
Thank you, Max. Always good to talk to you. Thank you.
All right, and that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Egon von Greyerz of goldswitzerland.com, a vaulting service. Until next time, bye, y'all.